is to just get used to being on camera, like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point, because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And very good afternoon, everybody. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and, of course, on Bloomberg Originals. It is Tuesday, April 18th, as we just heard from Joe Matthew. Yep, it is tax filing day for individual filers here in the United States. Carol Masser, Tim is on leave, as you know, so back with us is Bloomberg News Deputy Team Leader for U.S. Equities, Jess Metton. And Jess, yep, it's a tax day. It's also another day when it comes to big bank earnings.
It is, and obviously seeing the tale of two different stories there when you think of Goldman and Bank of America, right?
Yeah, absolutely. So we're going to get into that. We're also going to just take a look at the trade because it feels like a tight range on the equity side of things. That 2-year sitting though above 4.2%. On the banks, we will tell you what you need to know about Goldman, Bank of America, and more. And then speaking of banking, Apple and Goldman debuting a savings account. And well, on the subject of Apple, you've got Apple debuting its first retail store in India. But you know what's kind of missing is ChatGPT. What are they doing with ChatGPT? I mean, they're into their goggles, but what about the other stuff?
And you and I were just talking about ChatGPT the other day as far as trying to decipher the Fed speak when we're debating the hawkish, dovish type scenarios.
We're going to talk a lot about AI and generative AI. Don't forget, we've got Netflix and United after the close. You mentioned AI. Therapy and chatbots, it's a thing. We've got a great read on that in the new upcoming issue of Bloomberg Business Week.
So we have a lot of exciting things. Once again, though, I was looking just in the markets. The VIX still below 17, so still hovering around those January 2022 lows, Carol.
Yeah, it's an interesting trade once again. All that complacency in the market. So we've got a lot to talk about with the, when it comes to the trade again. It does feel like once again a just kind of marking time as we are only very early in on earnings. We're going to get more bank earnings to come, and that will certainly help set the tone. And then you keep reminding us that Friday is the last day we can hear from Fed speakers, and then we go into the blackout ahead of the next Fed meeting.
Exactly. Also Friday, Procter & Gamble earnings.
A good read on the consumer and the consumer product space. Right now, though, let's head over to our TV team. Countdown to the close starts now.
Down to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session. Romaine Bostic joined right now by Scarlett Fu, as well as our colleagues Carol Massar and Jess Menton. Welcome to our audiences across all of our Bloomberg properties. Carol Massar, television, radio, originals, as well as on
how you get
YouTube.
Into this, you know that?
Yeah, well, yeah,
love
Carol,
it.
okay, well, you got a smile on your face. Are you happy with what's going on in the market? Because I don't really see it. I mean, this is like a snoozer of a day.
Yeah, I feel like, you know, for all those trading desks, they're like, come on, everybody, we need some movement here, because it does feel like equity is, once again, in a tight range. We're going to talk about that. Interesting, yesterday I talked about the crypto space. It was down.
Talk about that again today?
Yeah, why not? You know, I feel like in honor of Katie and Tim, who's still on leave, you know, they like the crypto stuff. So let's talk about it. We saw Bitcoin. We'll bring it up for our folks on TV, YouTube, and Bloomberg Originals. Bitcoin up above 30,000 again, up 2.3%. So giving a kick to many of the players in the crypto space. Not so for Coinbase, though. It's down about about almost 1%. We did have the company's CEO saying it's not going to rule out relocating the company. That was in a fintech conference in London. Right now they're in the U.S., but maybe they could go elsewhere. They're concerned about the regulatory environment here. MicroStrategy, another crypto name that's up almost 5%. And then you got Riot Platforms. Jess, that's up about 3.8%.
And Romaine, I know you were talking about snoozer of a day, but a chart I wanted to point out, because everyone keeps talking about the index when we're looking at the S&P 500 being maybe overvalued. Look at the equal weight S&P 500. So this is the PE back near its average, even its pre-pandemic average, which was right below 17. So that's an interesting dynamic there. Obviously, when you look at more of a sector level, tech and growth still approaching those levels that look a little pricey, but when you're looking at it on an equal weight basis, Romaine, looks cheaper than people were expecting.
All right, you go back to the broader market here, pretty much a relatively lower volume day, at least relatively speaking here, and that trading range remains tight here, basically unchanged on the S&P and the Dow Jones Industrial Average, and down fractionally right now on the NASDAQ and the Russell.
And fractional moves when you look at the sector performances as well. On the upside, you've got industrials, consumer staples, and financials, but they're gaining by less than half of 1%. And on the laggard side, you've got communication services, utilities, and healthcare. Catalent, of course, helping to drag the healthcare space down on a report that Danaher will drop its takeover pursuit.
Of course, big banks still in focus. Goldman Sachs shares have been under pressure all day, missing out a little bit on that big boom in volatility that seemed to lift some of its other competitors. Fixed income trading revenue down about 17% in the quarter. Goldman Sachs shares now down 2% here on the day. Meanwhile, to the upside, keep an eye on Blackstone. Shares moving up about 4% here on the day. And this apparently has to do with the potential rule change coming down the pipe for inclusion in the S&P 500. This has to do with companies that have a dual share class structure. This would actually open the door for Blackstone to actually get into that. And we should point out Dell also moving higher for the exact same reason. Boeing shares up about 2% here on the day after reiterating that it plans to continue to move forward here with hiking its output of the 737 jetliner. Meanwhile, Southwest Airlines down about 0.8% on the day, had been down by more than 2% on the back of another outage. Of course, they had that big one about 4 months ago. This one only lasted about 16 minutes. Appears to be resolved, at least for right now. We talk about a snoozer of the day, and I think either you, Scarlett, or someone else was bringing this up yesterday here, and really the tamp down in volatility that we've been seeing really across all of the main metrics here, including the VIX. The VIX right now still camped out below 17, a level that, well, depending on how you look at it, is either a good sign or maybe a sign that we're getting a little bit too complacent.
Yeah, right. You got to wonder. It just feels like, wait a minute, does this really make sense with all the questions that we continue to talk about the outlook? Having said that, Goldman Sachs Chairman and CEO David Solomon, of course, reporting earnings earlier today, some disappointment over their fixed income trading numbers. But having said that, you look at the VIX, Solomon commenting on volatility. Here's what he had to say on the call.
As we sit here today, it appears that the worst of the volatility is behind us. While it's impossible to predict the exact form a market stress will take, and we won't always execute perfectly, our risk management culture, strong liquidity, and robust capital position have allowed us to navigate a complex environment while also continuing to actively support our clients.
All right, everybody. Of course, that's David Solomon, Chairman and CEO of Goldman Sachs. But Scarlett, we look to these bank executives for some clarity in terms of what they are seeing when it comes to volatility, when it comes to outlook. So maybe some soothing words from David Solomon.
Right, but I mean, how much thought visibility does he really have at this point? When you look at the earnings picture overall, the conventional wisdom is that first quarter earnings will be the worst in 3 years since the start of the pandemic. But there's also this feeling that the first quarter earnings might mark the low as well, even as we're seeing earnings estimates for the quarters that come still being revised lower.
And Scarlett, speaking of earnings, after the bell, we are going to have Netflix and United. And it's interesting, especially with Netflix, because they did stop issuing that subscriber guidance, but Bloomberg Intelligence is thinking that the subscriber adds for the first quarter could be around 2.4 million subscriber additions there. So that's something I'm going to keep a close eye on after the bell.
And we're also going to get earnings out of a few other names that have been in the news lately, including Western Alliance, and I think we're also going to get First Horizon as well. So we're getting an interesting cross-section here. Intuitive Surgical and Interactive Brokers also in the mix there. I think it's interesting, too, when we talk about the broader read that we can get, whether it's out of the banking earnings or whether you can extrapolate something out of consumer spending out of Netflix here. Is that the right way to look at this, or are these all really just sort of idiosyncratic stories?
Well, I do think we do get some stuff out of this in terms of their results.
I was actually asking Scarlett, but go ahead, Carol.
Oh, okay. So go ahead, Scarlett, all yours.
No, I mean, it's backwards looking. So earnings tell us what already happened. And in terms of visibility, I'm not sure that anyone has that right now. It all depends on where bond yields are trading. It depends on the data. It depends on how the Fed proceeds. And that's everyone's guess is as good as mine, right?
But I do feel like you do get something out of a company that does give you forecasts, right? Remember during the pandemic, how many CEOs and C-suite said, sorry, folks, we have no visibility. So at least if we get something out of them in terms of context about the outlook, I do think that's important.
And Carol, to your point, if you're looking a year out, S&P 500 earnings growth potentially could be back to double-digit growth, but it's not exactly matching up when you're looking at the economic numbers, say with GDP. Obviously, we're not seeing this back-to-back potential contraction in the second and the third quarter, but how do you measure that with earnings growth as far as what the economy is looking like a year from now?
Yeah, and look, at the end of the day, and I've said this really for the last few weeks, this is still a market that still is focused on the macro. And I think when you talk about what people want to hear, they want to hear that those macro conditions are, if not improving, at least favorable enough to support some of these valuations.
And not worse, right?
Yeah, not
even
worse,
if it's like coming in or almost there, as long as it's not worse. Yeah. I feel like that's what it's all about. All right, can I talk now, Romaine?
Yeah, go ahead. I think we have to say goodbye, but sure.
Until we come back in less than an hour's time.
That's a big guest waiting here on television.
Okay. We got big guests in studio, too.
We do.
We will see you at 4 p.m. Wall Street time. Join us for our cross-platform coverage Beyond the Bell at 4 o'clock Wall Street. All right, it's a tough new world, brave new world. Man, okay, so warmed up with our TV colleagues. You've got your market set up on this Tuesday. It's another Tuesday where we've got big banks top of mind. Goldman shares selling off. We've seen them trade lower. That miss from that Wall Street fixed income boom. And then you've got B of A, I think also off its highs, continuing to trade with a little bit maybe of a gain. First quarter profit did beat, but there were some rising costs when it comes to the bank souring loans. So let's get to it. Two folks who've been in it and on it since early hours this morning. Sri Natarajan, Bloomberg News finance reporter in our Bloomberg Interactive Broker studio, along with Bloomberg Wall Street reporter Shanali Basic, also here in studio. All right, what do we need to know? Let's start with you, Sri.
Well, big day of earnings today, Goldman Sachs and Bank of America. Bank of America, in many ways, followed the trend that we saw from the other big banks, JP Morgan, Citi, Wells Fargo. These banks have all benefited from the rising rates, posting better lending income, and that's really helped them counter this slowdown in investment banking. But their trading desks have also done well, outperforming analyst expectations. In Goldman's case, it was always bound to be different. Revenue was expected to be down. Profits were expected to be down. The problem was they didn't even meet analyst expectations with their strong fixed income business. Yes, they were battling a very hard comp with a year ago.
Right.
But analysts had modeled something, investors had priced the stock based on what they had modeled, and clearly they were not happy with it, and the stock's down 2%. Now one of the weakest big bank stocks in the U.S. this year.
All right, come on in, Shanali.
Yeah, I think it's interesting because from the fixed income performance number as well, you have Goldman really not meeting expectations on a core business that they have. But I think what's also interesting as you think ahead to Morgan Stanley tomorrow is that there's also pressure on another business, and that's equities. So Goldman brought in more than $3 billion in equities. They beat on that number. That number that they bought in is more than what Wall Street expects from Morgan Stanley to bring in tomorrow. So if that were to happen, that means Morgan Stanley is also lagging behind Goldman Sachs in a key business that they have historically won at. So what happens then?
What does that mean, you guys, when they, you know, there's a core business, like not all of these banks are the same, we know that, but when they kind of, you know, bum out on something that they're supposed to be good in, how are we supposed to read it?
You have to look somewhere else. So for Morgan Stanley's case, they have been really leaning in on that wealth manager. Sri wrote that great profile this week about Morgan Stanley's wealth management head. And for Goldman Sachs, the tough thing for them is that they had to show what was happening at their consumer business. They sold a part of a loan book, but really that just kind of led to a lot of confusion behind the numbers because it did bring down the revenue at another business they're trying to grow, which is asset and wealth, which competes with Morgan Stanley. So I'll let Sri break down how you compete in that business with that much messiness.
Yeah.
And look, someone else, one of the analysts went on TV earlier today and called Goldman's earnings a hot mess. And the problem was there was just a lot of noise in the numbers. There were a lot of one-offs. They're trying to sell off their Marcus personal loan book. They said they will put Green Sky up for sale. That's the installment lending business they bought at the peak of the market in 2021.
Why do I feel like Goldman is constantly dealing with hot messes right now?
Especially in the consumer business. It just wasn't a foray that worked out well. And I don't know if you guys remember back in 2020, about a month into the pandemic, if you were watching HBO, you would have seen David Solomon have a cameo on the show Billions, where Bobby Axelrod goes up to him and says, would you like to can I buy a piece of the bank? And David Solomon says, not a chance. Marcus is not up for sale. And that's when Axelrod turns to Mark Lazary, who also had a cameo, and said, can you please try and knock some sense into him? 3 years later, look what's happening. They are trying to get out of consumer banking to as much as possible, really narrowing down their focus and stick to what's worked in that business and get out of everything else.
And Shonali, whenever I was talking to you on Friday, whenever JP Morgan reported, you kept talking about how this is the cherry on top of the cherry on top of the cherry, right? But then obviously when we're looking at these key metrics like net interest income, what is that telling us more broadly when we're looking at these other big banks now that we've had a few others report?
Yeah, this is a story this year of where do you find money? And we said for Morgan Stanley, Goldman Sachs, even JP Morgan, asset and wealth management, high net worth clients, lending to them potentially. But listen, for JP Morgan, they were able to increase their net interest income very meaningfully. We did not see that same love at Bank of America today when it comes to the potential for future lending revenue. Why is that? A lot of this revenue is coming from credit cards, and you do also see that rising at Bank of America, but they gave you some other interesting kind of color here about the credit card books. This idea that the rate of borrowing and the rate of spending is starting to slow, and charge-offs are starting to rise. And I think, you know, we're not in the middle of the year yet. And you have Jamie Dimon saying the consumer is going to fall off a cliff next year. Listen, broadly until this earnings season, the investment banks have traded better in the stock market than the consumer banks have done. The consumer banks are showing you that they can make more money, they can lend a little harder, they could not lose too much money off of it. But is that story enough to really turn around meaningfully the story to get investors back into these stocks if you think the consumer is going to fall off a cliff this year?
So help me out here, guys, because you know, obviously in the last month, 5 weeks or so, because of the collapse of 3 regional banks, like we've all been looking forward to earnings season, the big banks including, in terms of what they have to say about the environment. So should we come on back in here? Like, how do we think about what they are saying against the nervousness that we were seeing in the past month or so?
It's obviously not good optics to be saying that the big banks are feasting off the misery at the smaller rivals, but the truth is that the biggest banks in this country seem to be in a very strong position. They've clearly benefited from some of the deposit flows that you've seen, where you have had nervous customers yank their deposit from the regional banks and other smaller lenders that they have and drive it towards the bigger banks.
We see that directly.
We've definitely seen that.
JP Morgan Bank of America had 130,000 new client accounts just in the quarter alone.
And JP Morgan, in a matter of a few weeks, had $50 billion in new deposits, so much so that it reversed the expectations. And analysts were expecting them to have a small deposit drop. In fact, they had a little bit of a bump up there. So clearly, they're in very strong position. They always have that big investment banking ballast that also helps them mint a lot of money. They look good, and that is the overwhelming message from this earnings season so far.
You know what, though? It's interesting because it is true that not only are clients flocking to the biggest banks, many of the biggest banks are flocking to their wealthiest clients. Think about what happened with Goldman and their consumer foray. It was loan loss provisions that was a part of the story that brought them to this point. Had that not happened, who knows? There were definitely missteps along the way. They definitely tried to do too much too fast, in David Solomon's own words. But at the end of the day, it was more profitable for them to focus on high net worth clients. I think that this is something, as we think about how this banking system changes and people worry about the regional banks, people only talk about the consolidation towards the biggest banks, but the biggest banks are consolidating towards their biggest clients.
Which is why you have so many who are underbanked at this point, especially at the other end of the economic spectrum. And that's not good.
And you know what, frankly, this has been a trend that's been happening since 2008, and there's a worry that this kind of current market turmoil will exacerbate a lot of that.
All right, so So how do we think about going forward? What do we have? Morgan tomorrow.
Morgan Stanley, but also a lot of regionals starting today.
Right.
But then also in
Western
the next couple
Alliance
of days.
and some others.
Yeah, Western Alliance.
First
and then,
Third is on Thursday. Key Corp as well, U.S. Bank.
Yeah, we have a huge number of ones, and then it kind of ends, the rush of regional banks ends by, the biggest one we're looking for is First Republic on Monday. Now, remember, this is the bank that required $30 billion worth of deposits from the other banks to kind of keep it propped up. Is there some sort of solution for that firm by that point? That's the big question mark. And if that kind of situation is not cleared up, does that not let go of the jitters in the regional banking system at large?
Well, how did this come up on the calls, too, in terms of First Republic and just some of those jitters?
Surprisingly, not a lot, but it's also very clear that what we saw in March, at least the narrative as we're describing it, has morphed from a banking crisis to a crisis for a few banks. That remains the case. We've not seen this real crazy domino effect that could have impacted a lot more
many would
institutions.
say, thank God.
Oh, yeah.
Yes,
very
I mean,
much
there
so.
was obviously
Yeah.
one big impact, which is you saw the regional banking tumult in the U.S. affecting someone like a Credit Suisse, which no longer will cease to exist after the UBS deal, and that was a direct result of what we had seen in the market turmoil with Silicon Valley Bank. But not a lot else has happened, and that's something that everyone has been thankful for. But as we go through the next few weeks, as we go through the remainder of the regional bank earnings, everyone will be keeping a close eye on that to see if there are any more banks that could possibly collapse, because Jamie Dimon certainly believes there would be a few more.
Right.
Warren Buffett has indicated there could be a few more bank failures. The hope is that it remains contained and isolated.
Chanel, I just got about a minute or so left here, but what about things that we've talked about with you, certainly last week with Josh Rosner, whether it's private equity or commercial real estate exposure? Like, is that the other thing is there any clarity coming or any information from the big banks on that front?
Well, it's interesting because the private equity firms do start reporting later this week, and Goldman today has said the pace of fundraising is slowing. And so even those firms, you have to wonder whether they're going to face more issues ahead. Something just real quickly interesting about the regional banks, if you look at the deposit expectations, it is really regionally focused. The First Republics, the Western Alliances of the world are supposed to face bigger drops in deposits, but the regional banks that I've looked at, from Tennessee and Georgia and New York State don't have the same expected deposit pressure. And this commercial real estate problem, that will play out over time. But
So you're
remember,
saying it's going to probably be the usual suspects, at least the names that we're familiar with?
it's the reason to believe that this is not a systemic risk that is floating across every bank and is contained to some of the ones with the similar clientele that have been pulling money.
10 more seconds. David Solomon, okay? Still in that CEO spot, Sri?
Oof, TBD.
Oh.
I'm glad that question went to Sri.
All right, TBD, guys. Sri Natarajan, finance reporter at Bloomberg News. Check him out on Twitter, and also check out Chaneli Bosick as well, Wall Street reporter at Bloomberg News. Great, great roundup on what's going on in banking. You are listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. The Dow, the S&P, they are higher for now. Been that kind of a day choppy session. We've got NASDAQ in the red, down now by 8 points. S&P a little changed, up 4, higher by about 0.1%. Dow Industrials, they're up less than 0.1%, up now by 11 points. 10-year yield 3.57%, with the 2-year that's yielding 4.20%. Spot gold up $10 the ounce, now at 2006, a gain of 0.5%. And West Texas Intermediate crude, we'll call that unchanged at $80.82 a barrel. As for the overall market backdrop, Sarah Hunt is chief market strategist at Alpine Saxon Woods.
But now the question is, from here, what makes the market go higher? I think the anticipation has been, well, the Fed cuts rates and demand gets higher. I think, good news out of China this morning, that was helpful for markets because growth somewhere else is still growth globally. But I do wonder where we are now versus where we should or could be in the next few months, given what may come through on some slower earnings and some, I think, slower economic statistics.
And that China data that Sarah Hunt was alluding to, China's economy grew at the fastest pace in a year in the first quarter. Boeing moving ahead with plans to hike output of its cash cow 737 jetliner. Boeing shares up 1.8%. Again, recapping, stocks are trading mixed, little changed on the S&P, up now by 3 points. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Are you sick again?
I'm not. I'm doing absolutely
partying,
fine.
having margaritas again?
Okay, I was out. I was not doing margaritas. I was at I was out last night, but not margaritas last night.
All right, TBD. We got a lot of TBD going on.
I'm a lucky guy.
Feel better. All right, whatever it is. All right. Just concerned. All right, Charlie, thank you so much. Hey, check out shares of Apple, a little bit higher, up about 0.9%, up 30% though so far here in 2023. Company definitely on our radar. You got CEO Tim Cook officially opening up Apple's first store in India. You had Apple introducing a long-promised high-yield savings account with Goldman. And then a Bloomberg exclusive courtesy of our Mark Gurman about Apple's coming arsenal of new headset apps. Yep, we knew we wanted to learn more. Mark is, of course, Bloomberg News technology reporter. He joins us on Zoom in our LA bureau. So much going on here. Mark, among the ton of news on Apple today, including your exclusive, what's first and foremost?
Yeah, I would say Apple's headset, right? That's on the minds of everyone at Apple. That's on the minds of everyone watching Apple at this point. This is going to be a big deal, right? When Apple launches new product categories, all eyes are on the company, right? The last time they did something like this was the Apple Watch at the end of 2014. They ended up releasing it in April 2015. Before that was the iPad, and then the phone, and then the iPod, and the Mac before that, right? So this Apple headset will join a string of major blockbusters that the company is built around, right? And so people are clamoring for more info on this device. What's it going to do? What's it going to look like? How much will it cost? Why would you even want this thing, right? And so I think the headset is at the forefront for me, at least right now.
Mark, talk to us about the motivation behind rolling this out, because like you were mentioning, it's been a while since they've had something like this as far as their product categories.
Yeah, right. Mixed reality is something that Apple sees as potentially its bridge to a post-iPhone era, or an era where the iPhone becomes less important. Just like when the iPhone came out, the Mac, became a bit less important in terms of what consumers are using, right, as their go-to tech product. And so this is the beginning of what's going to probably be maybe a 20-year journey for the company. They'll start off with this high-end headset, probably called the Reality One or the Reality Pro this year. And then they'll go to a cheaper model at the end of 25, as well as a new high-end model at the end of 25. The eventual holy grail, which I don't think they're going to get to until maybe the end of the decade or even the beginning of next decade, will be lightweight augmented reality glasses. And that's really where you see, mixed reality and augmented reality picking up steam and eventually replacing the need to have something like a phone.
And listen, you need to have infrastructure and apps to support it, right? I mean, it's great to have a headset, right, Mark? But you got to be able to do stuff with it. And that's what's interesting about your story, your exclusive story, that this is what they're getting ready to really roll out.
So the Apple headset's going to take a scattershot approach to functionality, similarly to the original Apple Watch, right? That means Apple's going to try everything from the get-go. They're going to throw everything at this device, right? And then over time, consumers will, show Apple and show the market what features they really want out of the device, right? The Apple Watch was filled with a ton of features at the beginning, and they eventually pared that down a bit and focused on a few core areas. I think Apple's going to do something similar with the headset. So if you have an iPad, you're already familiar with what an Apple headset's going to be able to do. It's going to have every iPad app you can imagine, from Notes to Pages to iMovie to the camera to sort of FaceTime and Zoom on steroids, where you'll be able to really feel like you're in a meeting room with another person in virtual reality. So I think this is going to be an astonishingly cool and high-tech device. The question is, do people really want to use these types of features that they already have in a new environment instead of the environment they're already using them in, such as on their iPad or on their phone or Mac?
Well, do we like it right, exactly. You could have had a laptop and then all of a sudden you had an iPad. I mean, Apple's incredible about saying you need to kind of continue to build out your tech infrastructure with another device to be able to use kind of the same apps. Are people saying, do they believe that the headset has the potential to be, I don't know, what size of a business for Apple? What do they liken it to that's already at Apple?
I believe the headset is the computer of the future, right? The idea where instead of you're using your laptop or instead of using your iPad, you're doing everything you were doing already on your face, right? And I think, Carol, you summed it up perfectly. All these Apple devices, they're all a means to the same end. They all do the same stuff, right? It's all about running the same apps, but in different user interfaces and at different moments, right? So maybe you're using your Mac at your desk, but you're using your iPad on an airplane or in your living room, or your iPhone where you're out and about, or your watch when you need to do the same thing you could do on all those other devices very quickly, right? They all do the same thing. It's just a different user interface.
Mark, something you also had in your story, you were talking about how Apple is also working on a version of its Fitness Plus service for the headset. This was something that Meta, or Facebook, however you want to call it, that they had also tried to get into their VR headsets, which that's obviously a big player in this space. How do you think Apple could stand out from when you have another competitor like Meta trying to already do something like that?
Yeah, I mean, the virtual workouts will be a big part of the product, and I think Apple has the infrastructure there already, right? Fitness Plus launched at the end of 2020. They have quite a bit number of users, and they have lots of content already pre-programmed there. They have lots of content filmed, lots of classes they already have in there. It's just about converting it and playing it in virtual reality, right? And so given their content library on the fitness front, I think they're way ahead from day one on anything that Facebook could offer, right? Apple has it all ready to go already.
How big is sports a part of this? And you think that's going to really be a reason why people are like, I'm in?
I don't think anyone's going to buy it, particularly for the sports features, but now you'll be able to watch a game, and, the idea is you can make you feel like you're sitting courtside and watching LeBron take over the Grizzlies game tomorrow night, right?
I know a few people who would like that. Hey, Mark, while we have you, though, we'd be remiss. Talk to us about the story that's on the Bloomberg about Apple, opening up its first retail store in India. You've got that out there. You've got Apple and Goldman, this new savings account. I'm just, trying to make sense of it all as increasingly Apple becomes a bigger and bigger part, or at least wants to be, of our world.
Yeah, the India situation is interesting because I think the retail stores are not going to add much to Apple's bottom line there. It's only 2 stores, but it's representative of this bigger push. It's representative of Apple putting its sort of flag in the ground in India, right? The real story there is production and diversification and moving more iPhone supply out of China into India. So I think that's going to be a big deal. Apple's penetration in the Indian market is essentially 0. It's a rounding error on the larger market, and there's obviously 1 billion plus there in India, right? There's a growing economy in India, right? A growing middle class, and I think that is the growth story for Apple. You're looking for places where Apple's going to grow. It's going to be India because, right now they're at 0%. Not 0%, at a couple percentage points, right? But very slow, very low. And you can look at that as a bad thing, and it is certainly a bad thing. They've done nothing there. But it also is a huge opportunity, and it shows how much room still Apple has to still grow, which I think is appealing to investors. On the Goldman situation, that was announced a few months ago. It's now finally rolling out. People like this new 4.15% APY, which is 0.25% higher than what Goldman offers on Marcus if you were to do it online. This is about keeping people stuck to their iPhones. If you put, 50 grand in your savings account on your iPhone, it's going to be a lot more difficult for you to switch to a Samsung phone, right?
Yeah.
And so Apple's just wanting to add more and more features that keep the iPhone sticky and make the iPhone more useful.
All right, we got to ask you, just got about 45 seconds left here. Microsoft, NVIDIA, Alphabet, Amazon, 4 of the world's top 7 most valuable companies. They are all in, seemingly so, when it comes to ChatGPT. When does Apple make some news on this front? And again, just got about 30, 40 seconds.
Apple's approach to AI is a bit different. They're wanting to apply AI to real-world problems and situations rather than do a chatbot, right? And so you see that as their self-driving car. That's a very AI-heavy based product to enable that. Likewise, a lot of the features you're going to get on this headset. So they look at it a bit differently, but I still think there's room for them to do more in the chat GPT-like style.
All right, well, around the Apple world in about 9-10 minutes, courtesy of Mark Gurman, as only he can do it. Hey, Mark, thank you. Mark Gurman, he is Bloomberg News technology reporter. Check out his exclusive. It is on the Bloomberg terminal at Bloomberg.com, and of course, you can check him out on Twitter at Mark Gurman. Shares of Apple, by the way, they were up about 1.3% at their highs today. Jess, a little bit off of that, but still up about 2/3%. What do you think about, it's like just all over?
I don't know about you, but my savings account does not yield 4.15%, which would be the annual yield for this Apple Goldman debut savings account.
And it says, I think, no minimum deposit. I mean, it's like, kind of sounds like a no-brainer. I mean, I'm assuming it's guaranteed, but
where do I sign up?
Exactly. All right, everybody, you are listening and watching Bloomberg Business Week. Let's get to world and national news. Off to D.C. we go. Nancy Lyons in her 99.1 newsroom. Hey, Nance.
Thanks, Carol. Opening statements were set to begin in Dominion Voting Systems' defamation lawsuit against Fox News, but there's been a longer than expected lunch recess. Dominion has been seeking $1.6 billion on claims that the network damaged its business with false election fraud reports. Bloomberg Intelligence litigation analyst Matt Schettenhelm says it'll be up to the jury whether damages go that high.
Punitive damages are also in play here. The judge refused to take them off the table. And so it's not just that direct harm to the business. The jury has the ability to come in and effectively punish Fox.
BI analyst Matt Schettenhelm. Earlier today, the judge overseeing the case appointed a special counsel to investigate Fox's handling of Discovery. This trial is set to last 6 weeks. We'll get ready to fly the crowded skies this summer.
The head of the Transportation Security Administration, David Pekoski, says they are bracing for record air travel this season. He's predicting passenger levels comfortably above pre-pandemic numbers, with COVID restrictions mostly in the rear view. In an interview with Bloomberg News, Pekoski says airports in Orlando, Dallas, and Houston should be the busiest this summer, along with East Coast hubs with a lot of international flights like New York's JFK. Pekoski says the travel crunch will be a challenge, but he says it's one they've faced before and have seen success at. In Washington, I'm Nathan Hager, Bloomberg Radio.
Southwest Airlines is blaming today's nationwide grounding of its planes on intermittent technology issues. More than 1,800 flights were delayed for more than an hour due to the problem. Elon Musk's SpaceX is now aiming to launch its next-generation Starship rocket Thursday. It'll be the second attempt for the groundbreaking flight. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are trading mixed. We've got the Dow lower, and we've got NASDAQ lower, and the S&P higher. Barely been that kind of a day. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
Good afternoon, Charlie. As you said, stocks are mostly mixed in what's been a choppy session as earnings season accelerates. The Dow is down 20 points, S&P slightly higher, with the NASDAQ down 15 points. The U.S. 10-year yield is at 3.57%, and small caps are lower by 10. 7 of the 11 main S&P sectors are trading higher, led by industrials and financials, while communication services and healthcare are the worst performers. NASDAQ biotechs fall 25, transports are down 35, semis are little changed, while the VIX is down less than 1%. Leaders in the Dow, Boeing, JP Morgan, and Home Depot, while J&J, Goldman Sachs, and Verizon are the worst performers. On the earnings front, Goldman slumped after a fixed income trading miss weighed on some big bank peers. Lockheed Martin rose to a record after its profit beat, and Boeing rallied on plans to hike the output of its 737 jet despite the latest glitch. In other news, small-cap biotech Relay Therapeutics sank 35% after disappointing cancer drug data. Wrapping things up, look for earnings from Netflix, United Airlines, and Intuitive Surgical after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey, and to hear live breaking news over your Bloomberg, type SQUAWK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 17 and a half minutes left in today's trading day. Taking a look, as Charlie mentioned, you've got a bit of a mixed market, but kind of tight range, certainly on the equity side of things. And the Treasury trade, as we heard, still with that 2-year about 4.2%, 10-year note with a yield of 3.57. So just a little bit of a setup here. Let's get to it, though, with our market guest, our Drive to the Close guest on this Tuesday, Jeanette Garrity, Principal and Managing Director and Chief Economist over at the San Francisco-based Robertson Stephens. She's on the phone in Chicago. Jeanette, great to have you here with Jess Metton and myself. First of all, before we get into some of the big macro think about our market environment, I want to ask you about the San Francisco area. Robertson Stephens, definitely known, certainly because it's based in San Francisco, understanding kind of the tech community, the entrepreneurial community. What are you hearing from your colleagues that are based there?
Great question. And it's noticeable, I think, for those of us located in the San Francisco Bay Area, the impact of some of the tech layoffs that everybody's read about, as well as just probably a general slowdown in the expansion of that sector. That is what really drove the downtown San Francisco economy in particular. That's where it's most noticeable. And we see it coming back, and there's a lot of talk in the community about how that business community, that localized business community, goes forward, given that a lot of jobs have been lost. When you get outside of San Francisco, there's not much of a slowdown just yet showing up. The shopping center parking lots are all full, and nightlife in San Francisco is robust, so it's a little bit of a mixed bag.
And something that has stood out to me just kind of more broadly when we're thinking about the economy, if you look in the terminal, there's a function ECFC that looks at the economic forecast. And as of now, when we came into this year, there was this expectation we'd see growth contract in the second, third quarters. You're not necessarily seeing that now. So can you kind of break down to us as far as the forecast for the economy moving forward and why we're beginning to see a shift there when we have so many people who are debating whether or not we're going to have a recession in the coming quarters?
Yeah, it's sort of like if you forecasted long enough, I guess somebody will be right here. And I've actually just recently gone into the camp of saying that I would advise preparing for a downturn in the third and fourth quarter of this year. I think things are kind of coming together in that way, watching the labor market, watching what the impact is on the financial sector, the banking sector in particular. Things have settled down there, but clearly their costs of operation have risen, and there's going to be an impact from that. But you are absolutely right that right now there's not much of a slowdown. And I think, first quarter economic growth is likely to come in at 2%, maybe even a little bit above 2%. It is not normal for the U.S. economy to go into a recession, hitting a brick wall going 65 miles per hour or 90 miles per hour. So what everybody's looking at this quarter is to see whether economic growth, economic activity will slow down more into the 1% range, which would certainly set up a situation where we could get a mild recession driven by a slowdown in consumer spending and a rise in the unemployment rate, kind of classic behavior for the U.S. economy.
Well, that's what I wanted to ask you, right? So April, 3.5% for the unemployment rate. Are you assuming that by the third quarter or fourth quarter that we're well above that? Or could we get a slowdown? Could we get a recession, which is a part of our narrative right now, Jeanette? And I think this is why, the financial markets are having a tough time figuring out what kind of environment do we truly have in the second half of this year. Could we have a recession with a tight labor market?
I think the answer to that is yes, but let's talk about the numbers. There was a time that a tight labor market was defined by an unemployment rate of 4.5%, not necessarily 3.5%. But I don't think we're going to get that recession without the unemployment rate going up, and the impact that would have on consumer spending. Can we get a mild economic recession that the Fed might choose to call a soft landing, albeit with an unemployment rate of 4.1, 4.2, something like that, maybe headed a little bit higher than even that by the end of the year? Yeah, I think that could come together.
Can I ask you?
And it very much will depend on the service sector, by the way.
Neil Dutta emailing of Renaissance Macro, weighing in, and he says, take a look at home builders today. Ask people about this, because the S&P Super Composite or Composite 1500 Home Building Index is up almost 3% in today's session. Some of our write-through is because, at least our team is saying that's because you got the 10-year yield falling back to 3.58%. Can we, how do you explain that if we're going to move into a recessionary environment? Does the market, home builders are up like 25% year to date.
Yeah, there's a timing issue here. If at the same time, the number you didn't bring up is that also building permits, though, fell more, fell to a lower level than was expected in today's numbers. So, what's happening there? Well, I think the major builders, my sense has been that for quite some time, they're looking long term, right? They're saying, we need to have land, we need to have developments in progress, if you will, so that we can be there to supply what is still a chronically undersupplied demand for housing in the United States.
Right, because those housing starts, multifamily dropped almost 6%. Single-family home building increased 2.7% to a 3-month high. So it's really and I know in my neighborhood, it's an urban environment. There's been so many apartment buildings and multifamily units that have gone up. I'm not surprised that there might be a little bit of a slowdown. Would you buy home building stocks? Just got 5 seconds.
I am married to a home builder. I would have to say yes to that. So.
Well said, well said. Jeanette Garrity over at Robertson Steven, chief economist and more right here on Bloomberg Business Week. Jeanette, thanks.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pella. We've got 7 minutes to go ahead of the closing bell. Stocks are trading mixed. We're also keeping an eye on earnings, specifically Goldman Sachs down 1.5%. Goldman's traders failed to capitalize on the fixed income bonanza that the rest of Wall Street generated last quarter, contributing to firm-wide revenue that fell short of analyst estimates. Again, Goldman right now down by 1.5%. Bank of America's first quarter profit beat estimates. Bank of America shares they're up by 0.6%. Also reporting earnings this morning, Bank of New York Mellon. It reported total deposits for the end of the first quarter that did beat analyst estimates. Shares of the Bank of New York Mellon trading higher now by just about 1.6%. Netflix will be among the companies reporting earnings after the bell, and among the metrics facing scrutiny beyond subscriber growth is how the crackdown on password sharing is going. Geetha Raghunathan is a media analyst at Bloomberg Intelligence.
The big question for them today, and I think in general, is going to be how they roll it out in the U.S., where we estimate about 30 to 35 million households are sharing, because obviously there's going to be a lot of volatility around it, and it all comes down to execution and how they price this new add a member feature that they're planning to do.
Analysts are looking for streaming paid memberships of 232.9 million, revenue of 8.18 million. We will find out for sure in just a couple of minutes. Those are some of the company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, everybody, just about 4.5 minutes left in today's trading session. In just a few minutes, Jess and I are going to head over to our TV colleagues, Scarlett and Romaine, count you down to the closing bell on this Tuesday. Don't forget, you've got Netflix reporting, you've got Western Alliance, you've got United Airlines, so there's going to be a lot, certainly, to keep us on our toes. Having said that, ahead of it, what's on your radar?
Well, I feel like you were talking about, when it comes to Netflix, a lot of that comes up when the whole password sharing, trying to get more stringent on that, and as how they've been slowly sort of rolling that out through certain countries. So I think with Bloomberg Intelligence, that's something closely they're going to look at, as well as obviously we always talk about the subscriber numbers. Like I mentioned earlier, they stopped giving those outlooks for Netflix in particular. So they're thinking there's going to be about 2.4 million subscriber additions for the first quarter, and that's going to be a really key metric to see whether or not Netflix beats that or not.
I just wonder if Netflix is going to mention, Kim Kardashian, the reality TV star, whether or not anything will pop up because her private equity firm, yes, everybody, she has a private equity firm, hired a half a dozen financial industry professionals, including a new chief operating officer who previously worked at alternative investment giant Apollo Global Management. That will get your attention. Sky Partners is her firm. They now have almost a dozen employees, expect to surpass 15 by the end of the year, according to former Carlyle Group partner Jay Sammons, who co-founded the firm with Kardashian last year. So sounds like she's getting kind of serious.
It definitely does, and I feel like the Kardashians, they have such a huge reach, and it's almost, you can never get surprised by what's next because it's just everything they're basically getting into. But another thing that stood out,
that private equity firm that she's doing could be another reality show. That's, I guess, my point.
It definitely could be on Hulu. That's where their latest reality show is. But another one, we were chatting about ChatGPT earlier, Carol. So that looking at this latest story on the terminal, how it's poised to expose corporate secrets, and cyber firm is warning about that. So the risks could be manageable if the firm takes security precautions. So that was another one standing out to me on the terminal today.
Yeah, it's the idea is that the chatbots could be exploited by hackers to access sensitive corporate information or perform actions against the company. All right, folks, we're in a brave new world when it comes to generative AI. We're figuring our way forward. It's going to be a lot of starts and stops, no doubt about it. All right, just a few minutes left in the trade. Time to head over to our TV colleagues because Beyond the Bell on this Tuesday, it starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we have some breaking news that we want to bring our audiences here. Fox has agreed to settle that lawsuit over the 2020 election fraud claims. Remember, this is the Dominion suit that was scheduled to go to trial this week. There had been some delays. We're now crossing the Bloomberg wire right now, learning that Fox has agreed to settle that lawsuit. We don't exactly know the terms just yet, but we're going to dig through this and get you that information as soon as possible. We should point out that that settlement really came as that trial was really starting to focus in on Rupert Murdoch himself, as well as some of the hosts. That settlement now being announced by the judge from the bench in that courtroom. We're going to take a deeper dive into this as soon as we get those details. In the meantime, I am Romaine Bosick. Scarlett Fu is sitting right next to me. Joining us right now is Carol Masser, as well as Jess Menton, as they normally do at this time as we count down to these closing bells. A lot, I think, we have to talk about here over the next few minutes, Carol.
Yeah, just a quick check on Fox shares. I mean, they're just down a hair. Some swings throughout the day, some losses, some gains, a slight one. But interesting, right? That was potentially a very big, more than $1 billion cost to the company. So getting to know exactly what that settlement amounted to. But it takes everybody off of being, once again, up on trial and being questioned. So it kind of gets them off the news narrative, if you will. Having said that, I've been, in terms of the market narrative, home builders, check it out, guys. Really outperforming here today, up almost 3% in today's session. They've really been outperforming. Neil Dutta is saying, everybody's talking about recession, so why are home building stocks doing so well, even on a day when we had some weak housing data, Jess?
Yeah, we had a great conversation about that a little bit earlier on Bloomberg Television. We can get back to that in a second if we will. Awaiting Netflix earnings after the bell. We get the closing bells. Dow Jones Industrial Average relatively unchanged on the day. The S&P 500 relatively unchanged on the day. The NASDAQ Composite relatively unchanged on the day here. Not a whole lot of movement on the aggregate level. If you are looking for movement, you do find it on the Russell 2000 down about 0.4%. A busy day here for earnings. United Airlines earnings, Scarlett, crossing the wire right now.
Yep, that's right. United Airlines saying that its first quarter operating revenue was $11.43 billion, matching analyst estimates. Passenger revenue of $10.27 billion, also matching analyst estimates to the number. Adjusted loss per share for the first quarter was 63 cents. Analysts were looking for a loss of 73 cents, so it was a narrower than expected loss. And revenue per passenger mile, $52.5 billion, a little bit lighter than what had been expected, which was $52.7 billion. So that is United Airlines at the moment, pretty much in line with consensus. And you can see right now the stock not moving in the after-hours trade.
Yeah, United Airlines CEO Scott Kirby in the press release saying we are watching the macroeconomic risks carefully, but demand remains strong, especially internationally, where we are growing at twice the domestic rate.
Flip it up, put Netflix on the board. Those shares down about 8% here in after-hours trading. We are still awaiting the actual details from that earnings report being posted to the website. Our team combing through it right now here. We don't actually have any real numbers to share with you at this moment, but you see the initial share reaction, not necessarily good. We're going to try to get some more details and get them as soon as we can, Carol.
All right, you do have the stock down, as you said, almost 8-9% here in the aftermarket. The press release is certainly coming out here, Jess, but we are going to look. This is new models for Netflix specifically in terms of that ad-based model. That's a new deal for them, so you want to see what kind of impact that's having, as well as some other issues at the company.
And like we were talking about, even Romaine talking about at the top of the hour, the password crackdown efforts that they're trying to implement. That's another thing that Bloomberg Intelligence is still keeping a close eye on and kind of questioning.
Here are the numbers coming in for Netflix, 2Q EPS. We're going to start, with the first quarter numbers. Revenue coming in at $8.16 billion. The street was looking for $8.18 billion. Streaming paid memberships in the first quarter coming in at 232.5 million. That's pretty much on the nose for what the street was looking for here. EPS for the first quarter, $2.88, slightly higher than what the street was expecting. Let's get right here to the forecast here. The second quarter, they're looking for paid net adds roughly similar to what they saw in the first quarter. That's the language that the company is using here. They're also saying that 2Q revenue will come in slightly lower than what the street was expecting, $8.24 billion. The street was looking for $8.47 billion. Scarlett, what's jumping out to you?
What jumps out to me is what they're saying about the paid sharing launch in the U.S., because they've done it in a couple of specific markets, Canada, New Zealand, Spain, and Portugal, but they haven't rolled it out in the U.S., which is its biggest market. And they're saying that they're shifting the timing of the paid sharing broad launch to the second quarter. So there are a lot of of question marks over when this was going to happen. It was already delayed several times, but this is the part that's going to supposed to add growth to the company's revenue and really put it back into the double-digit growth territory.
They're saying in this statement here that their primary financial metrics are revenue for growth and operating margin for profitability, and they're saying that those have remained unchanged over the long term.
All right, so just taking a quick look at the stock again, just to get a feel, because the stock dropped right after the earnings came out. If we bring it up for everybody, it's still down about 10% here. So there's some disappointment over certainly what we're getting from Netflix here.
Yeah, and definitely when it comes to those password crackdown efforts, trying to implement that market share and that growth that was expected to move forward with how it was working out, that's something that Bloomberg intelligence analysts are really cracking down on it and trying to keep a close eye on as far as what that means for its growth moving forward.
Some of Netflix's peers also moving lower, including Disney and Roku here. Interesting that as we dig through this release here, and it's not just about the numbers. I mean, really just some of the commentary here and the slowdown in growth that they're basically telegraphing here to the market. A slowdown in growth, of course, that was supposed to be mitigated by this business model shift here. Mm-hmm. When we talk about sort of how that sort of makes up for that attrition and whether any sort of new ads through this new ad tier, and more importantly, new ads through the crackdown on password sharing can be enough, remains to be seen.
There's always going to be a lot of volatility with the first quarter numbers and even maybe the second quarter outlook because they're in this transition period, right? So a lot of it rests on how Netflix executes on this shared password plan and also the ad-supported tier, which it launched. And of course, it takes a couple of quarters for them to figure that out for us to get some kind of trend. So a lot of the analysts that cover the stock are saying you kind of have to look past the first quarter numbers, even the second quarter outlook, to get a better picture of what's going to happen to Netflix for the medium term.
All right, let's get some insight here and bring in one of our reporters here, Eric Wasson, right now to get his insights on what's going on. Eric.
Well, we just got out of court here. You're asking about the settlement between Dominion and Fox?
Oh, yeah, excuse me, Eric. Yeah, sorry, I should have set that up here. I was a little confused here. But yes, we are going to make a little bit of a pivot here to what's been going on with Fox and that settlement here of that Dominion lawsuit before that trial even got underway. What do we know, Eric?
Right. Well, this lawsuit just settled just now. Opening statements were supposed to have started 2.5 hours ago, and everyone was sitting in the courtroom without any information about what was taking so long. And the judge came out, he called the jury out and announced that there had been a settlement, and that was just a few moments ago. People are still filing out of the courtroom. So we don't have any terms of this deal. It was a $1.6 billion lawsuit for defamation over Fox News' reporting on a conspiracy theory about the 2020 election being rigged by a voting machine company, Dominion Voting Systems. You can expect that a settlement would be significantly below that $1.6 billion that was sought, but we really don't have any terms of the deal. We don't know if it involves anything like an apology or retraction or anything like that. Okay. So we'll keep you posted.
All right. Well, when we get more details, we'll get back to that. You can see the shares on change. Meanwhile, Netflix, the shares, well, they are changed, down about 8% here in after hours trading, guys. I think we all need to kind of jump into this here because when we talk about this idea of the streaming change, a change in those net paid streaming numbers that, of course, they said they don't want us to focus on, an increase of 1.75 million. The street was looking for about 2.4 million. And you wonder if this is connected to that shift in the business model, a shift to ad tier, more importantly, that shift to crack down on some of the password sharing.
Bottom line, though, it's disappointment again from Netflix, right? And this is their bread and butter, right? If you don't have subscribers or if you're losing them and they're going in the wrong direction, this is why there's disappointment here. And, you know, we all talk about it. How many different streaming services are out there? There's a point where, you know, all of them are competing for our time. A lot of it has to do with content. Content is increasingly, you know, we talk about the big spend. So big disappointment, as you said, that first quarter streaming paid net change, 1.75 million versus an estimate of 2.41 billion.
And Carol, and to your point, though, it's not just that there's more competition, but remember, all these services have started to raise their prices, too.
Yep.
And
we've started to cut back. We're like, we don't need this all. This is ridiculous how expensive it is. It's that new bundle, right, coming off the cable bundle.
Yeah, absolutely.
The history of media is bundling and then unbundling and bundling again and unbundling. So right now we got into unbundling mode, and of course now people are realizing that a la carte costs a lot more. Netflix, when it comes down to it, was a clear leader in video streaming and had massive first mover advantage, but now it's as a result, also, it had these challenges, too, that it faced before everyone else.
Yeah.
And with this weak economic backdrop and with borrowing costs rising and increasingly aggressive competition, it has to move in different directions all at the same time to execute.
And just to the point about content and engagement here, I mean, I'm just going through the Netflix presentation here, and they do give some what they're saying industry-wide data. And remember, this is their data that they're putting out for their market share. They're basically saying, at least here in the U.S., they have about 7% share of streaming viewing. That's slightly below what they're saying YouTube has at about 8%, but still above their other competitors, including Disney, Hulu, Amazon Prime.
Wait,
and some of the
7%
other,
you said?
7%. That's what they're saying.
That sounds low.
That's what they're saying.
I just want to point out, looking at Disney and Roku stock, those down more than 1%.
I mean, big players here. But again, remember when Netflix was pretty much had it all to itself, and that's not the situation. Right now, Netflix, though, just down about 6.5%, so off their lows. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, and, of course, Bloomberg Originals. We'll see you again, same time, same place tomorrow. Is still down about 6.5%, down as we were just breaking down. A little hectic on as we're getting warmed up to doing earnings season again, but Netflix is certainly a big one. Also tracking it is John Ehrlichman, Bloomberg Markets anchor on Bloomberg Television, very familiar, as you know, with that tech space. John, our right through are just talking about that second quarter revenue outlook missing estimates. Netflix seeing second quarter revenue $8.24 billion. The estimate was $8.47 billion. We've been obsessed a little bit too with that first quarter streaming paid net change of $1.75 million versus an estimate that was $2.41 million. Break it down for us. What's jumping out for you?
Well, I think it's expectations, Carol. When we last talked about Netflix quarterly results, the first set of results this year, the fourth quarter, the final quarter for last year, I think there was more skepticism in the air. And that was, you might recall, the time when the company announced that the founder of the business, Reed Hastings, would be shifting out of the co-CEO role. And it was seen as sort of this new era where not only were we going to be watching what was happening with subscriber numbers, but with these new initiatives, including password sharing crackdowns and the advertising tier. And the fact that they had what ended up being better than expected subscriber numbers really wowed Wall Street. You might remember we saw in that last quarter like an 8% pop in the stock. And I think the view on technology stocks, more broadly speaking, coming into earnings season was, did these names go too far too fast so far in 2023 if there's still some uncertainty in the air? Now, you're absolutely right. I mean, I think the reality is you're just not seeing the kinds of subscriber growth that we came to expect within Netflix, and maybe investors lose sight of that when they get excited for these quarterly numbers. We'll see what happens in the after-hour session overall, but it is really shifting to be a business that in many ways has already told us they are transitioning. There are cost controls right now. Shutting down their DVD by mail business is one example of cost controls. Password sharing crackdowns is another. I mean, arguably that could bring in more subscribers, but even looking at Bloomberg's breakdown in markets like Latin America, maybe that's the kind of development that loses you some subscribers. And then that advertising story, while interesting to Wall Street, the company has already told us it's not really going to be a meaningful story for 2023. So we're kind of lingering through here. And everything you just highlighted before, Carol, the competitive realities right now, this has turned out, I think, for all the other industry players, maybe a rude awakening that the streaming business dynamics are not as robust as what they had expected. Netflix probably knew that. It's just that they've had to deal with all those other competitors in the landscape as well these last 12 to 24 months.
And John, you're bringing up the competitors. We were just talking about how Disney, Roku, those stocks down more than 1% in after-hours trading. What do you think is the sort of broad read-through as far as how this is going to affect these other giants that are also in the streaming space at this point?
Well, Jess, I mean, it's clearly the kind of thing where if Netflix can't satisfy Wall Street, can other players get the check mark that they're hoping for? Now, Disney's an interesting one to zero in on because one of the things that we've heard, and Bloomberg's reported pretty extensively on this over the last few months, is not a story of everybody fighting over subscribers, but in many ways a return to the movie theater. I mean, Bloomberg's own reporting has told us about, Amazon doing theatrical releases, Apple doing theatrical releases. Disney has that arm, but I think even for Disney, cost controls is a very front and center focus for them too. So it almost tells you that if there's an economic storyline of maybe consumers being a little bit more cautious, or whether it's just a competitive environment, if Netflix can't set the tone with big subscriber growth, maybe we're going to be in for a bit of a media industry reality check as we roll through earnings season here.
Hey, John, these two areas, the password sharing, which they just launched in 4 territories, Canada, New Zealand, Spain, and I forget the last one, Portugal. And then the ad tier, which made its debut in November, but we know yet to contribute a material number of subscribers. Companies said both advertising and password sharing will only offer modest contributions, in the first quarter of the year, but would pick up in the current period. I guess what we want is a little bit more of a feel on the analyst call to get an idea of, could these two areas be significant revenue drivers? I mean, does the analyst community, do the investor community think that these two areas could really be drivers for the company? I know the stock has certainly popped on the expectations of such.
Yeah, I mean, they become these add-ons. And again, I think we're talking about the maturation of streaming. And Netflix saw the writing on the wall. It seemed like, there would not be endless streaming growth going forward. And so some of these business steps are starting to take hold. Now, on your question about the advertising business, I don't think there are any expectations inside the company that this can be a huge business by comparison of just having all those traditional streaming subscribers. But there is a general sense inside the company that they can get to, let's say, 10% of their revenue coming from the ad tier. So, could that end up being on an annual basis like a $3 billion revenue business for Netflix? Most of Wall Street thinks that is very much attainable. But again, that's part of the overall story. You're still constantly looking for that growth narrative too. The password sharing, look, I think that's just the reality of the transition from, hey, we're going to not pay attention to that because we've got so much subscriber growth, to, well, now we actually have to make sure we've got those subscribers accounted for. And I think, Carol, this is just going to continue to be a transition time for Netflix. What do they want to be? I mean, aside from business developments like an ad tier or password crackdowns, even with the content itself, people see these headlines about live streaming.
Right.
Netflix never used to do live streaming. They had a kind of a big snafu with that this week, but they're starting to live stream SAG Awards. They're sort of testing that. They're testing partnerships with the like of Nike on training videos. I think you're going to continue to see Netflix trying to figure out some on-the-margin changes under their new leadership.
You see it a lot with YouTube channels. My husband and I follow a couple different people, and they do those live channels, and it's popular. It's fascinating to see that streaming, which is all, for the most part, like taped, produced series, thinking about, oh, wait, we have to go back to live destination viewing, which is, oh, wait, that was linear television. It's really kind of fascinating. What's the number one ask, you think, on the analyst call?
How optimistic they are. And actually, these are some of the more robust conference calls. We talked about how Reed Hastings has sort of moved upstairs and transitioned out of the co-CEO role to go and apparently buy a ski resort in Utah, which he announced this week. But I think that the management there, Greg Peters, Ted Sarandos, I mean, I think they can help the tone, but the numbers themselves tell us that maybe the storyline has changed, especially after the run-up in tech stocks we've seen this year. All
right, John, always good to check in with you. And just FYI, everybody, Netflix still down, but only down about 3.4%, so no longer like a 10% decline, which we saw right after the number. So, investors kind of settling in and maybe reading through more of the texture, if you will, of that quarterly earnings release. John Ehrlichman, thank you. Bloomberg Markets anchor on Bloomberg TV, joining us via Zoom from Toronto. So, yeah, I mean, this is what's interesting about earnings. You really got to go through all the details, right?
And what John alluded to at the beginning when we were talking to him, the pain that Netflix went through at the beginning of last year. But if you look at its stock for the past 12 months, down just 1% before we got today's numbers, Carol.
Yeah, exactly. So something to keep in mind. All right, everybody, you are listening and watching Bloomberg Business Week on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Fox News has reached a settlement with Dominion Voting Systems in its defamation lawsuit, alleging the network defamed it by airing bogus claims that it rigged the 2020 presidential election against Donald Trump. Dominion sued Fox for $1.6 billion, but the settlement's terms are not yet clear. Netflix, we're keeping an eye on that stock after ours. Right now, we do have Netflix shares. They are trading sharply lower. We have got Netflix declining after it missed Wall Street estimates. It added only 1.75 million customers in the first quarter. That is stoking concerns about the future of the world's most popular TV network. Investors were expecting 2.4 4.41 million new customers. Netflix also predicted it will generate lower sales and profit in the current quarter than what analysts had forecast. Also reporting after the close of trading, United Airlines. It says increasing international travel and lower operating costs will likely push its second quarter profit above Wall Street estimates. After hours, we've got shares of United up now by just about 3%. It was a mixed day on Wall Street. We had the S&P eking out a 3-point gain. Traders weighing earnings from some of the largest banks, along with comments from two Fed officials who favor continued rate increases to fight inflation. S&P up just about 0.1%. The Dow down 10 points today, down less than 0.1%. Nasdaq lower by 4, drop there of 0.1%. 10-year yield 3.57% with the 2-year 4.19%. Gold up $10 the ounce, up 0.5%. And West Texas Intermediate crude little changed on the day, up by 1 cent to 80.84 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We're going to stay with earnings, Charlie, of course, giving you some of the highlights after the close. Netflix and United Airlines as well, which came out saying increasing international travel and lower operating costs will likely push its second quarter profit above Wall Street estimates, so giving us something into the outlook. Right now, United Airlines shares UAL in the aftermarket, which were bouncing around a little bit, including to the downside, now up about 2.5%. So good to have back with us. Great to have back with us, really. Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst George Ferguson with us once again from our BI headquarters in Princeton, New Jersey. He joins us via Zoom. George, thank you for coming back. So United up about 2.3% here in the aftermarket, and that was after a bit of a warning, I feel like, right, last month. So walk us through the quarter, the outlook. How do you see it?
Yeah, so thanks for having me on as usual.
Yeah.
I mean, I thought the outlook, or I thought the earnings really came in very much in line with what our expectations were. Expenses were kind of, right where we thought they'd be. Revenue was right where we thought it would be, and so it was really sort of spot on from that standpoint. I think the big difference here will be the outlook, and I think United provided a nice outlook. I mean, we saw domestic fares. We use yields as a proxy, up 19% compared to 1Q last year. That's pretty strong, right? Europe up 20%. I think those two markets will be a big portion of how things go in the second quarter. Pacific continues to recover. Yields were down a little bit inside the Pacific. We'd expect that as they continue to put in more capacity. But again, I think everything was largely in line with the way we expected it to be.
But they had kind of talked it down a little bit, right, in March?
Yeah, I guess everybody sort of talks it down, right? I guess getting into the close of the quarter. But yeah, I mean, and we adjusted our expectations then as well, but they came in line with the adjusted expectations.
When it comes to everyone's talking about summer travel, what that means for the economy, but obviously inflation, right? Still there, the pricey tickets. As far as the outlook for specifically Delta, I mean, what does that look like? And should consumers still expect to have these pricier tickets?
Yeah, I mean, I think, the pilots are all getting a large pay increase right now, especially the big full service carriers, United American, Delta, and Southwest. Delta's actually signed the agreement. The other ones haven't signed the agreements yet, but we expect them to be largely in line with Delta's agreement. I think there's some quibbling maybe about some of the tails of those agreements. But I think given that higher labor costs, the fare levels have to stay this high, right? We're even seeing fuel prices start to come off a bit, which will ease the cost pressure a bit on the airlines, but the labor costs are going up, and they're going to continue to be a challenge. So I don't think you have 2019, 2020 levels of tickets short of a recession, a downturn anytime soon.
So help me out, George, in understanding kind of the metrics of this industry, because was it FAA earlier this month asking some of the carriers to cut back on flights because of crowding at some of the country's busiest airports? United did it. I think Delta was offering to. Why does this happen? Is it just a reminder of the limitations of our infrastructure, and this is about being safe, and how that plays into, if you're cutting back on flights, that also plays into pricing, right, and availability?
Yeah. I mean, it's obviously a positive for pricing if you have to limit the amount of capacity you put into some markets. This industry is still going through its recovery from the pandemic. It lost a lot of, had a large labor turnover during the pandemic, including the FAA, right, and controllers, TSA, folks. And so we're getting new people in, we're training them. So our throughput is not going to be what 2019 levels of throughput were. And I think that's what you're seeing from the FAA, them asking the airlines to relax some of that capacity plan that they want to put in place as we train, the newest cohort of employees. And you're right, so it supports prices. I still think it's going to be a challenging summer. I still think you'll see something
for the airlines.
Yeah, I do. I think whether it comes to air traffic control, being able to manage the airspace well, potentially have to space things out more. I think interruptions from storms will be harder to recover from, given this the shortage of pilots, given again sort of the TSA's challenges on labor. I think there could be potential problems getting all the aircraft deliveries that United especially has a lot of airplanes coming. Southwest has a lot of airplanes coming. That could affect schedules. So I do think there's a lot of things that are going to make this summer particularly challenging for them to fly to plan, let's say.
Southwest earnings report is actually on April 27th, so we still have a little bit before we hear from them, but we do know about those issues they clearly had in the holiday quarter, especially in December, but what specifically do you think are the metrics to point out in their earnings report that you're going to be keeping a close eye on?
And Southwest this morning, right?
Yes.
Like, what's up with
exactly.
that?
All these different glitches that continue to happen with that airline.
Yeah, I mean, I think I'm going to be very curious to see what their yields are, which we use as a proxy for fares, right? I think that probably that Christmas, I don't know what we want to call it, the debacle, the Christmas problem, that probably led some passengers to shy away from Southwest. Today didn't help, right? And so, but that won't have any effect, obviously, on 1Q, but could have some effect on 2Q. My question would be is how much the lingering effect was of those problems near year end last year. And I think that will be also an indicator of whether or not, passengers will take this latest problem and fly elsewhere. Usually it means American has a better quarter. I don't know that we saw a lot of great effects on American. They kind of pre-announced the other day. So I'm not sure that carried into 1Q that well, that Southwest problem. And travelers usually have pretty short, memories on these kind of things, right? I think when we fly somewhere, especially if we're doing it on a budget carrier like Southwest, I think we care more about what the price of the ticket is. I think we think less about what their ability to recover from storms or what their IT systems might be. So I suspect that it will have faded in 1Q, but we'll see.
George, one last question. Airlines ordering planes. I asked because we had a story today about Boeing moving ahead with plans to hike their output of its cash cow 737 jetliner. And I'm just curious, what are we seeing maybe from that throughput that it tells us about what's kind of the health of the airline industry in terms of ordering?
I mean, what we're really seeing right now in the airline industry is everybody wants to fly the newest airplanes, right? Mm-hmm. And so the Boeing, the MAX, and the A320neo are both 15% more fuel efficient than their predecessors. There's a lot of their predecessor airplanes that are parked, so there are airplanes out there, but airlines want to rejuvenate the fleet here. They want that lower fuel burn, so they're really begging Boeing and Airbus to get those deliveries out to them so they can use them. And if you look at Boeing's delivery cadence, what they've got scheduled for this year, mm-hmm. Southwest and United are at the top of that list for airplanes to get this year. Again, they'd love to fly that more fuel efficient airplane. It just it helps profitability, right, a lot. Yep. And you get an ESG feather in your cap as well, I think. So.
No, it all comes together. Thank you as always. We really appreciate it. George Ferguson, he's our Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst from BI headquarters in Princeton, New Jersey. Shares of United, by the way, they're up almost 2% here in the aftermarket. Want to draw your attention to Western Alliance, one of the regional banks that has certainly been under a ton of pressure. It's down about 45% year to date ahead of the earnings after the close. Stock up about 1.9%, 2%, let's call it. It's bumping around. Second quarter, quarter to date deposits up $2 billion through April 14th. First quarter cash flow and due from banks, $3.64 billion. Non-interest loss first quarter, $58 million versus an estimated profit of $60.8 million. And they are also talking about repositioning, including the sale of assets and loan reclassification. So investors just seem to like what they're hearing. Stock up 3.3% in the aftermarket.
Yeah, looking at the first quarter, total deposits $47.6 billion. The estimate for that was $49.3 billion. So missing a little bit on that, but still, it looks like investors aren't completely disappointed with these numbers.
Right, and they're taking in new deposits, which is what you want to see. So we're going to continue to track that in the aftermarket. It's now up 5% here in the aftermarket. All right, back to World and National we go. Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. There will be no trial in Dominion Voting Systems' defamation lawsuit against Fox News. The two sides reached an agreement this afternoon just before opening statements were to begin. Dominion's attorney, Justin Nelson, just spoke with reporters.
The truth matters. Lies have consequences. Over 2 years ago, a torrent of lies swept Dominion and election officials across America into an alternative universe of conspiracy theories, causing grievous harm to Dominion and the country.
Nelson says the company settled with Fox for a little over $787 million. Its initial lawsuit sought $1.6 billion. Supreme Court Justice Clarence Thomas's friend Harlan Crow is speaking out, calling their relationship normal and saying reports of financial impropriety are a hit job. Senator Dick Durbin chairs the Senate Judiciary Committee and says Chief Justice John Roberts needs to reassess the court's ethics policies.
As Chief Justice of the United States Supreme Court, he has to understand that Clarence Thomas's conduct is absolutely unacceptable from an ethical basis. To restore the integrity and the reputation of the court, they have to do something. An investigation followed by a change in the approach on ethics.
Senator Dick Durbin says he's discussing next steps with committee members. Buffalo Bills safety Damar Hamlin has been given the all clear to resume activity with the team. He went into cardiac arrest just 4 months ago during a game at Cincinnati. He saw 3 specialists who all say he's recovered enough to resume playing with the Bills without any fear of setbacks. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be a mixed day on Wall Street with the Dow lower, NASDAQ lower, the S&P finished higher, but lots of after-the-bell news. We begin with Fox News. It has agreed to pay about $787 million to settle a voting machine maker's defamation lawsuit. That's Dominion, alleging the network defamed it by airing bogus claims that it rigged the 2020 presidential election against Donald Trump. Netflix shares are moving little changed, actually, right now. Netflix got off to a slow start to the year, missing Wall Street estimates after adding only 1.75 million customers in the first quarter and stoking concerns about the future of the world's most popular TV network. Investors were expecting 2.41 million new customers. Netflix, by the way, also adding it will do away with DVDs coming in September. United Airlines shares higher after hours. It said increasing international travel and lower operating costs will likely push its second quarter profit above Wall Street estimates. Mixed day for stocks. Traders are weighing earnings from some of the biggest banks and comments from two Fed officials who favor continued rate hikes to fight inflation. As for the economic outlook, Jeanette Garrity is managing director at Robertson Stephens, and she was our guest right here on Bloomberg Business Week.
I would advise preparing for a downturn in the third and fourth quarter of this year. I think things are kind of coming together in that way, watching the labor market, watching what the impact is on the financial sector, the banking sector in particular. Things have settled down there, but clearly their costs of operation have risen, and there's going to be an impact from that.
10-year yield, 3.57%. The 2-year, 4.20%. Spot gold up 0.5% to $2,004. And West Texas Intermediate crude, little changed on the day, up 1 cent, $80.84 a barrel. Again, recapping after hours, keeping an eye on Netflix. We had a subscriber miss there. Netflix shares right now lower by 0.7%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Yep, keep it a watch on Netflix, but I got to just remind you of what's going on with Western Alliance in the aftermarket. This was one of the banks down 45% so far this year, one of the regionals that has taken a beating coming off of the collapse of those three other regional banks, including Silicon Valley. And the company's CEO has repeatedly sought to assure investors that the deposits remain strong. Well, with its latest quarterly update, we're seeing that seems to be the case, because Western Alliance saying since March 31st, deposits have increased an additional $2 billion through April 14th, with total insured deposits representing 73% of total deposits. And just we're seeing that stock up almost 13% here in the after hours.
And this coming ahead of more regional banks on Thursday. So First Third, U.S. Bank. We're obviously going to have First Republic next Monday, and then Pac West. So these are really key banks when we're thinking about the health of obviously these regional banks and the economy, but looking like things coming in stronger than expected, especially when we're talking about deposits.
Well, yeah, and this one too, because it's definitely stumbled along the way and has certainly been on everybody's radar. All right, it does seem like the stress is starting to ease, certainly how investors see it based on what we are getting from the big banks and, more importantly, from those regionals. And our next guest knows a lot about stress, writes about it in a new book. Karen Dillon is editorial director at the family business advisory firm Banyan Global Family Business Advisors, former editor of the Harvard Business Review. She's got a new book out, The Micro Stress Effect, How Little Things Pile Up and Become Big Problems and What to Do About It. She is on Zoom in Boston. Karen, I feel like it's a timely topic considering the stress that seems to come at investors on a daily basis. Having said that, tell us about the book. What are micro stresses and some of the research you did specifically for it to figure it out and what we can do to manage it?
Sure, I'm glad to be here. So even just listening to the preamble before I came on is stressful. There's no question. We're all kind of swimming in a sea of stress all the time. But what we're talking about with our research is something a little bit different that most of us don't notice. We don't even know how to talk about it. We know how to talk about stock market stress and political stress and things like that, but we don't know how to talk about what we ended up calling microstress. And this is a particular thing that we observed in research with high performers, where originally the research was intended to look at what do they do better than the rest of us? How do they work more effectively with other people? How do they maintain their status as high performers? And we interviewed 300 men and women, equal numbers, who were dubbed high performers by their organizations to try to get at those best practices. And then early on in our research, we started to notice, after a bit of the veneer had gone off in the interview, that little by little it became clear that even these high performers were kind of barely hanging on. They were swimming in what we ultimately called microstress, things that are so brief and so invisible to us that we barely notice them. But cumulatively, they add up.
And what specifically, can you give us a few examples? How does that sort of permeate in our day-to-day lives? Like what specifically would be an example of a microstress?
Sure. So we put them in 3 buckets, and I think you'll relate to all 3 of them, but they're in 3 categories. One are microstresses that drain your personal capacity, your ability to get things done. And a really good example of that is having unpredictable behavior from a person in authority, a boss or a manager. Not a toxic boss or a jerk, but maybe a boss who stops you in the hallway to say he's got a new idea. And are you supposed to be pursuing that or not? Are you putting other things aside or not? Just not 100% always knowing what's expected of you from the person above. Or having a surge in responsibilities at work or at home. That's category 1, personal capacity. Or another one that I think most of us experience in some way are microstresses that deplete our emotional reserve. So for example, if you work around people who are just always stressed out, even if you're not stressed out, the secondhand stress from them is going to affect you. Microstresses are things that happen in our interactions with other people that are so brief and so baked into our day that you literally barely remember them. And individually, they're all manageable. But what happens is they layer up over the day, over the week, over the month, and they actually take a really big toll on you.
All right, so media can be a very stressful world because it's just the way it is. So what is the connection? And some of us thrive on it. I mean, I kind of like it when it's fast and furious, but that isn't always the case, and you can't do that for 100% of the time. Otherwise, you're just going to kind of pass out. But having said that, what is the relationship between stress and productivity? There's got to be probably this interesting balance, right? Because a little bit of stress gets the adrenaline going and can kind of, in some ways, maybe make you more productive, but I'm guessing too much, and that's not good.
Too much of that is definitely not good. And again, we started with high performers. So we started with people who were already widely seen as being better than the rest of us. They were just really good at doing a lot of work, being effective collaborators. But as we started to peel back, we realized even they really were almost overwhelmed by all this form of microstress to the point where it potentially threatened to derail their careers. What happens is you're always in reactive mode. You're always, you open your email first thing in the morning and you're already feeling overwhelmed and behind, as opposed to any of us trying to shape and plan our day. And we're thinking about which balls can we get away with dropping rather than how do I do my best work today, or what do I actually want to focus on today? It makes you in a reactive posture rather than a proactive posture. And none of us do our best work when we're always trying to figure out, again, which balls can we get away with dropping, because we can't do it all.
What are the financial repercussions for letting microstresses add up?
Well, financially, it's not good for who you are. You're not going to be at your best, most effective. You are potentially even, one of the microstresses that we identified is pressure to pursue goals that are out of sync with your personal values. So
and also career-wise, right? That could be a detriment for your career?
Correct. It could indeed. If you are always sort of pursuing what someone else's version of success is, and it's never feeling comfortable to you, or it's never who you are, you're never going to thrive really in the long run. You may have a good run, 5 or 7 years, but at some point you're going to realize this is not who I want to be. So you're not going to be your best. You're probably career-wise not going to thrive in the way that you want to thrive. And the most importantly of all, you're not going to like who you are eventually. It's going to kind of eat away at you, just small ways. So none of us are our best when microstress is overwhelming us.
And I like, Karen, how you make the distinction, certainly in the book, between stress, microstress, and secondary microstresses. 30 seconds, one piece of advice for those folks who are listening to this.
One piece of advice is to actually stop and have 5-minute clarification conversations with the people that you work with. So many of us, we're moving so quickly and we're working with ever-shifting cast of characters, people who are new, colleagues and things like that. We don't know how to work together very well, and we assume things, and that can lead to all kinds of microstresses, just misalignments or small performance misses. So literally take 5 minutes at the end of meetings and just clarify who, what, when, what's the next step. That simple step can make a really big difference in your work microstress.
So logical. We do that sometimes in the newsroom where you're having like conflicting stories. It's like, hey, everybody, get over here. And for 3 minutes, let's like set everything straight. Karen, thanks. And a very timely conversation. Karen Dillon, editorial director, and The Microstress Effect, her book.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are keeping an eye on Netflix shares after hours. Right now, the stock has just turned positive as we speak. Netflix shares now surging by 1.6%, up just about $5.50. Keep in mind the stock after hours have been down by roughly 10% or so. Netflix did get off to a slow start to the year, missing Wall Street estimates after adding only 1.75 million customers in the first quarter and stoking concerns about the future of the world's most popular TV network. Investors were expecting 2.41 million new customers. More from John Ehrlichman, anchor of Bloomberg's The Open. He was a guest right here on Bloomberg Business Week.
It is really shifting to be a business that in many ways has already told us they are transitioning. There are cost controls right now. Shutting down their DVD by mail business is one example of cost controls. Password sharing crackdowns is another. I mean, arguably that could bring in more subscribers, but even looking at Bloomberg's breakdown in markets like Latin America, maybe that's the kind of development that loses you some subscribers.
And again, we do have Netflix shares higher, have been lower right after the report, but right now Netflix up by just about 1.1%. Fox News has agreed to pay about $787 million to settle a voting machine maker's defamation lawsuit, alleging the network defamed it by airing bogus claims it rigged the 2022 presidential election. After earnings, United Airlines shares, they are moving higher. And those are some of the company stories we're following this hour. This is Bloomberg.
All right, Charlie, thank you.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, this is Bloomberg Business Week. Carol Master, Tim is off, as you know, on leave. Jess Menton is still with me. And Charlie just mentioned what's going on with Fox agreeing to pay nearly $800 million to settle that voting machine maker's lawsuit. We're talking about Dominion. They had sued Fox, though, for $1.6 billion. So let's get to it with our Bloomberg News legal reporter, Jeff Feely. He is there in Wilmington, Delaware. So, Jeff, walk us through what we found out and how this was, brought to resolution, if you will.
Well, after a long delay, we were supposed to start opening arguments today, but after a long delay, the judge brought the jury out and told them that they had reached a settlement and thanked them for their service and sent them on. We didn't find out the number until Dominion held a press conference outside the courthouse. It was a tough case. Fox had lost a series of pretrial rulings, and everybody expected this. Folks were wondering why it took so long.
Does this settlement, almost $800 million, so it's about half of what Dominion was looking for, does this say Dominion won, or, how do you read it?
That is up to the interpretation of whoever interprets it. $800 million is a very large settlement. There's some thought that Fox paid a premium to avoid having to do a significant retraction or apology for the bogus claims that were aired on their network, and that may be why the settlement got up to about half the damage request, which is a total of $1.6 billion. In my experience, that's a very, very large recovery in a tort case in the United States.
Yeah, it's massive. What it does do, and, we were talking about this earlier, Jeff, it takes Fox and this lawsuit out of the news cycle. And we were getting ready, right, for a court case that was going to have some very high-profile individuals on the Fox side that would be testifying.
In fact, we were supposed to have Rupert Murdoch on the stand either late today or early tomorrow. And I guarantee you that was one of the drivers of this settlement.
What's the precedent, you think, moving forward when it comes to the media landscape, where I think many would argue, Jeff, and I know maybe this just gets into the kind of discussions and debates we'll have going forward, but, news versus entertainment potentially, or the responsibility of news organizations when it comes to fact versus fiction?
There are many commentators who say that Fox needs to be much clearer about opinion versus fact on its network, and they also say that this may be a message to them that says you really need to reflect the opposite side on these cases in some fulsomeness